$47 million is a lot to steal from a publicly traded company. How did it take this long to kind of, get found? And obviously, I think that's a reason for a stock to go down in the short term. And if either of you thought of it as a buying opportunity.
It's pretty scandalous.
Well, like you, Pete, I didn't hear about this company prior to this news coming to light. So this is obviously not the right way to introduce your business to potential investors per se, but
what's up, everybody? Welcome back. This is episode 21 of the Beyond the Edge podcast. Full team in the house today. We got a full packed agenda covering everything from more scandalous CEO fraud allegations, meme stock rally, and even, of course, we're talking about Nvidia because we couldn't complete a podcast without talking about AI. So let's just jump right into it, boys. GameStop, we've covered it before. Ironically, it's actually up 46% since we covered it last time. None of us had a positive view on the stock, and I don't think anything recently that's happened is going to change that. But obviously, as you saw, there was another massive pump and dump on the stock. Retail traders, if you bought a little bit too late, you just got absolutely cleaned out, which just sucks to see. But the saga continues. Fool me once, shame on you. Fool me twice, shame on me. Isn't that how they say it? So, sorry, traders, we don't have much sympathy for you this time. Pete, you watching this meme rally? What are you seeing?
Yeah, I think our exact feedback was the business itself likely doesn't have many legs left, but if you can start seeing maybe a short squeeze happen, good on you. And people who got in on it, good on them. I did not, and it isn't something I would ever touch. But I think historically, if you are mapping this, there has been more than one kind of pop on some of these short squeezes. So I think, if you can take some time and try to understand where they might happen and when people are covering and when to go back and how the Reddit crowd is doing, there might be an opportunity.
Well, I think the irony here is that when it came to this whole conundrum, everyone's speculating in a potential short squeeze, but just the fact that a single person who had previous influence on the stock posted one X post of him in a meme or any form of picture or whatever, and the whole market was able to react like this. It's unprecedented, and it just speaks to the level of insanity that happens with these meme stocks.
If you're watching, I'll show you what the meme looked like. He's basically a guy sitting in a chair holding a gaming remote like this. If you're listening and not watching, I'm just sitting in a chair holding a gaming remote upright. And all it did is it showed an arrow of the guy leaning in and looking a little bit closer. Apparently it's a meme used in gamer communities when things are going to, like, quote unquote, get serious. I guess you see the imagery as like leaning in, pay attention, like game time, like that kind of vibe. And when it's roaring Kitty, Keith Gill, obviously that guy's starred in a movie. It was so significant, right? That people pay attention. And I don't know what this guy's play is. Like, he was already in enough like trouble and controversy. Like, man, you made money, just retire, disappear. Like, what are you doing? I don't know. A clearly promotional image followed by, I think the stock rallied something like 74% that day. Bro, chill. Mr. Fundamentals, has your view on the business changed at all since then? Have you looked into it more and changed your mind, or how do you feel about this?
Yeah, well, I think if you look at 2023's annual financials versus 2022 and even the years prior to that, they have improved their financial condition overall, but the business itself has not really changed. It's not like they've really strengthened their competitive advantage. Ultimately, they just tried to reduce unnecessary costs and kind of clean up everything. But in general, I think GameStop is one of those businesses that, sure, it'll probably last for a while, but is it a good investment? Most likely not, because I don't see them being able to improve their intrinsic value over the long run.
Fair comments. Pete, what do you think?
Yeah, I'd kind of have to agree. I just wish there was a way to leverage data to kind of see some of these pops happening and interest. Enough people kind of looking at this, looking at memes, looking at, chat boards of people going in, could predict a few of these things. And it's interesting because if you look at the last one, right, like if we go back to 2021, where it hit $80, right? It came back down quite quickly. From peak to trough was about 3 weeks, where it went back down to $10 and then just rallied strong again to 66. So I don't know, depending how the chat boards are going. I think people are maybe spending a little less time at home in front of their computers than they were in 2021, but this might not be the end of it.
This is probably a big request for you, Pete, but like, I wonder if there's some way we could monitor frequency of like chat room dialogue and see if there's some way we can overlay that with the share price. I don't know. As I'm saying it out loud, obviously Reddit is really cracking down on who can use their data. So that might block you right there, but I don't know. I'd be so curious if there's some way of playing that.
Well,
yeah,
just a good point on that actually, Kev, is I was watching a video by, I think it's called, or he calls his channel The Plain Bagel or The Plain Donut, I can't remember, but he's a financial analyst. And he was actually outlining how when the original short squeeze conundrum and everything that went on was kind of unfolding, a lot of it actually had to do with retail investors and institutional investors kind of buying into the narrative and driving up the price simply from a long position, rather than all of it being driven by the short squeeze potential. Now, of course, that certainly had something to do with it, but just to your point about the data and how things play out, I think a lot of it has to do around these businesses is simply the idea, the story around it. And when people buy into it or are on board because somebody like Roaring Kitty has maybe resurrected from the ashes, it gives people the incentive to take these speculative bets, and that could ultimately drive up the price. It couldn't even be a short squeeze sometimes.
Mm-hmm. I mean, if you're the kind of person that buys a stock when a meme surfaces and that's enough for you to justify paying 74% more for it than you did the day before, you're just not an investor in any world. It's pure gambling at that point.
I'd agree. And sorry if you saw my eyes wandering, but Kev, kind of as soon as you said, is there a way to layer things on? There are actually digital indicators. Like, we kind of believe like a lot of things are a funnel. Enough people have to know about something to buy anything, whether it's a product or a stock. I could, something we haven't done, I think, here is like a very quick screen share. And I'm going to do it right now just to show you just very quickly the Google Trends. And then I'm going to map the stock price over the last 5 years. And you can see that there is a story there. So it is something that, investors at home can definitely look at as one of their indicators. So I'm just going to quickly go screen. Here you go. So we will just take a very quick look here at Google Trends. So you can, if you guys can see this very quickly, this was peak stock too. So this is the amount of interest that it had, and you can kind of see that. And if I look at their stock, you can kind of see a very similar story, the declining interest over here. So I think there are ways to do it. It was something that I had kind of had some fun and kind of looked at building myself, but you can kind of start seeing the same peaks and valleys. The only reason why I'm not telling you about how much money I made doing it is that there's a week long delay in the Google Trends API. So I would receive the data a week later, which I'm sure.
Can you pay for like a premium real-time subscription?
I don't know. That's a good question. I mean, I got pretty far, and we built like a little Python model to actually give us an indicator if the Google Trends had predictive capability. And to be honest, when we did it, it was pre-early access to LLMs or anything like that. So maybe I should look back into it.
Why not?
Interesting.
Hedge fund Pete has entered the building.
Yeah, if anyone's watching, if anyone wants to contribute to some of the data scientist fees, I'll kick it back up from the dead and add their data to it.
Perfect.
Well, actually, just kind of building off that, Pete, I was curious how long you would typically hold a trade for that, and what kind of window of opportunity are you looking to take advantage when you are playing off those trends?
Like, if I was smart or what I have done. Unfortunately, I've been greedy, I think, in my life on a few things. And I think if you're ever investing, you should have a bit of a game plan of what a satisfying return is for you to leave. But sometimes, you kind of see what your paper gain is, and you get very excited and start counting things you don't have. Kev, I know you've been there.
Oh, many times, many times.
I would say I'd be a little bit more disciplined today. That if I ever see a single day 40 or 50% rip, I'm getting out. Like, how much better can it get, right? I don't think I rue over loss opportunities as much anymore as I used to. I would advise anyone to get out.
Yeah, I think that's fair. And this kind of thing, you know, the stock went up, it came right down right away. Ultimately, it's not a very compelling business. I'm actually, now that we've talked about GameStop, I'm seeing them all over the place as I'm kind of driving around the city. I just hadn't realized how many of them there were before. They're all pretty quiet too. Many times I saw them like completely empty. I'm just curious, you know, they still, what is it? They expect quarterly sales to be between 872 and 892 million. That's still a huge amount of revenue. Like, who's buying all these used video games? Like, it's still a business. It's just the fact that their operating expenses are just, you know, so high that their operating income just, it's not a sustainable business model. So
Yeah.
the only reason it's still alive is they have so much cash they will have over $1 billion on their balance sheet, so they can just survive forever and just slowly die, I guess, unless they have some massive intervention.
I bet the console sales are likely still doing okay for them, right? I'm just thinking as a user, like if I'm buying a $700 PlayStation, I don't want it sitting on my front porch in downtown Toronto.
Yeah,
I wouldn't mind
that's
going
totally fair
to go pick that up. But you know, they're getting retailer margins with the other costs associated.
Yeah, I just don't think that they have a superior offering compared to anything that is online, or, you know, when it comes to the hardware itself and selling consoles and the like. There's so many options out there that, again, there's not really a big point of differentiation. The only point of differentiation perhaps is just the locations that they have positioned themselves in and maybe how accessible that is. But overall, this is a business that's competing with Xbox and PlayStation, who sell directly on their platforms, or computer engines like Steam that sell right from the computer, where, again, there's just so many opportunities to buy, and they typically have way lower operational costs, so they can offer discounts quite often. And this is just something that I don't see GameStop being able to ever replicate. And to your point, Kev, you know, they did a good job of, when all this madness was going on, raising over $1 billion back in 2021. And I recall even reading an article recently where an analyst was recommending them do the same thing. Now, of course, this little burst that happened just last week was short-lived, but these are the opportunities where at least they have cash to stay afloat. But what they are going to do in terms of building a long-term sustainable business, it is beyond me, and I just can't see it coming to fruition.
It's literally a Blockbuster, right? Like, it's just kind of no way out. I don't know what Blockbuster could have done other than buy Netflix when they had the opportunity. But this is even kind of more challenging. It's not even really like renting games, and people, the direct-to-consumer model on a video game is really tough to beat.
Right. Just an interesting point to note that it's a quarter of their outstanding shares are now sold short. So it's still a significant amount that's sold short. Even more interesting, there was a point when on Interactive Brokers, it's like a very popular retail trading platform, you couldn't even borrow shares to short because there was none available. Something we need to remember, it's like when you're shorting a stock, you're physically borrowing it from somebody else. So if enough people either sign something that says, I object to securities lending on my account, you can get to a point where there is literally no shares to borrow and to short, and it kind of caps in theory, it caps the short position. There are illegal things that people do, unfortunately, called naked short selling, where they actually somehow, and I still can't understand, they're able to short a share that they never borrowed in the first place. It's totally illegal. You can't do this, but somehow it happens anyways. But that's more of a Canadian problem as far as I understand. So for an American story like this, not as much of an issue. Still interesting though.
Well, I was going to throw one question back to you guys, actually, just on this topic is, how do you feel about this whole debacle when it's tied to meme stocks, or this degree of speculation where, again, somebody posting a meme online has the ability to manipulate the price? And I'm not necessarily directing it at Roaring Kitty, but more the behavior of those people who responded. I remember, I think it was like Dave Portnoy put over 500,000 in GameStop and AMC. And obviously they have a degree of influence over people, but then it's just this general maybe mindset in the market today where people are willing to speculate on these stocks that, again, most of the time you would look at it and be like, that's probably not a great investment. Sure, maybe the short-term play is like there, but like, do you guys see this as a greater cause for concern in the market, or is this something that is natural? What do you guys think about it?
Pete, you want to start it off?
Yeah, I can go first. I think it is so far gone from what the stock market was created for, right? Which is to connect like investors and maybe even like debt holders to businesses that are trying to grow and people who want to be a shareholder of that. It's an amazing idea to create that for an economy and society, that you can be part of a bigger company and partake in that company's success, whether that's like a domestic company or a company selling to other countries. And you're like, wow, that's great. I can own a piece of this company and I can get potential profits, or as they appreciate, part of that success. This is the exact opposite of kind of why that was created. However, the only reason I'm totally okay with it is because they are going after and hurting kind of the businesses and funds that I also agree shouldn't be part of the stock market either. I don't understand how shorting benefits businesses in the economy.
Mm-hmm.
I don't fundamentally really grasp what the upside is of shorting, other than maybe creating some balance in the stock market itself. But the idea of people being able to, let's say, borrow shares, the amount of like backing from creditors that hedge funds can get to short something, the average retail investor will never be able to have that type of access, right? Like they have big banks backing their short positions, and it's a margin, right? So depending what type of assets they have, that's how much they can borrow in terms of shorts to drive these companies down. I failed to see how that really benefits the majority of people within a society. So when I see that, I'm like, heck yeah, meme stocks go.
Yeah. I mean, that's a fair look at it. Like I've definitely seen firsthand how some of these hedge funds can screw companies and screw individuals when they didn't deserve it. To be fair, I've seen more of that than I've seen, legitimate shorting cases. I don't have an issue with shorting overall. It holds people accountable in theory. Mm-hmm. And it is, just like you said, it's a balance. And, if a company is undervalued and you can bet on it going up, I think if you see it's overvalued, you should be able to bet on it going down. Where I don't like it is that when you get into this massive manipulation that usually occurs in tandem, like on a vanilla side of things, like you see the Fuzzy Panda Research short report going out about what was it GWL? What was the insurance? Globe Life. And they had a short report. It was seemed quite well researched. They've got a good track record. Something like that may very well make a lot of sense. But then I've seen other short reports, like for versus AI, for example, where you can go through the report, and if you have enough of an understanding of the company, you can pretty quickly start crossing things off the list immediately and see what was obviously, being exaggerated. So there's companies that get punished unfairly. And a big part of that in that specific circumstance is that we, would suspect that there's a lot of naked shorting going on, which is a humongous problem for Canadian junior markets. So it's like this thing that it's a well-intentioned mechanism you should be able to do to keep the market in check, but so often manipulated that it's unfortunate. You can see people's bank accounts and companies being crushed unfairly as well. So there's both sides. I
don't understand how the transaction actually happens. Like, how is the transaction registered on a naked short? Like, is it still showing as a sell?
I can't wrap my head around it. I don't understand how you're able to sell something you don't own. It's a weird mechanism where it takes days for a security to clear through these firms.
So is that what it is?
Like there's some. I'm guessing there's some fuckery that goes on while these shares are in transit. So I imagine it's like a very actively like shorting and covering and shorting. Like there's got to be something to it like that, where you just like keep moving the pieces. But I don't really know. Anyone watching this, I am not claiming to know what I'm talking about on this. I've been trying to figure it out. It's very strange and illegal.
It's got to be just like some type of loophole in Canadian compliance, right? That like the shares just don't have to land that day, and maybe our banks work a little bit slower, and you can have some time for your bank to find the shares.
I literally think it's something
like that
along those lines.
Yeah.
But it's illegal. Don't do it if you're watching this. It's illegal and unethical, and it sucks.
Mm-hmm.
Very dangerous too.
Well, I just, because we kind of focused on the short selling side of things, I do to some extent think it is a necessary evil. Ultimately, like, the market itself has really trended towards a higher degree of manipulation overall. Again, when somebody can post something or write about it and a stock can have a direct impact, this is a reaction that kind of is counterintuitive in what should be, generally speaking, a free market, where, again, if we weren't nowadays constantly absorbed in the information surrounding stocks and capital markets, and we were constantly bombarded. I know even some exchanges are discussing the potential of being able to trade 24 hours in a day. We are trending towards this market where it is encouraging short-term thinking and prioritizing these or trying to take advantage of these short-term opportunities. And I think it ultimately is hurting the market in that sense, because we've gotten to a point now where it's almost reckless. And that's where, having that balance, I think it's just more, if you're going to condemn short selling, then I feel like there has to be the same level of scrutiny towards people that are making these plays. Because naturally, again, if we're talking about GameStop here, this is a business that probably would not survive without all the manipulation that has happened in its stock. And in a capital market, if the natural progression of that market unfolds, GameStop would probably no longer exist. It does not have the competitive advantage. It does not have the fundamentals. However, because there's been manipulation in the market, it's been able to stay alive. So that's where I just think that when it comes to short selling, there's a balance to it where obviously it's frustrating. Again, if people are coming out with false claims about a business, or they're not backing it with their own name, and they're failing to really focus on the facts per se, it can be bad. But on the same side, if a business is getting held accountable by a short seller that's calling them out on their BS and saying, hey, you guys are manipulating or misleading investors, well, it should be able to be brought to light, and people should be able to expose it. And so that's just where I think, again, I see guys like Dave Portnoy, who, again, nobody's looking at Dave and saying, oh yeah, he's the next Warren Buffett, but they are looking at him and they're saying, hell yeah, Dave, you're the man. Let's jump on board with you and let's stick it to them. And then perhaps they get burned because of it. And I'm not saying Dave Portnoy is the leading cause of that, but just the fact that people are able to easily get influenced, and people have shifted their mindset from being truly investors to being these speculators that are just trying to play the market. And I don't think it's healthy overall. And at some point, you're probably going to get burned if you play that game for too long.
I'd be so curious what price Dave paid for his shares, but I bet he lost a ton of money on that trade.
He'd probably show you if you asked.
Yeah.
I bet he gets that. Heck yeah, Dave, once a day, just walking down the street. People love him.
Heck yeah.
I guess he's actually quite polarizing. Some people don't like him, but
that's true. I love him.
Yeah.
Except he supports the Edmonton Oilers, so I don't know.
Sorry about that, Van, but I'm a Leafs fan, so we know nothing but disappointment. But not to sway too far into hockey, that was a great series.
It was a great series. We were talking about fraud. Before we move on to the next topic, which is a fraud case, Pete, did you have any final comments on that you wanted to say, or should we move on?
No. I would like to still find a way where I can explain short selling to my wife in under 30 seconds, but maybe I'll keep that for another day.
You got this. I'm sure you got enough clips to cut together from us.
Yeah, I'd like to think so.
Yeah. So as I hinted at, it's a fraud case. Fat Brands, they own a ton of different chains now. It's like 18 different chains. They own, including Twin Peaks. You guys have probably heard of that one. It's like a Hooters competitor. Anyways, the former chief executive, his name's Andy Wiederhorn. He was allegedly part of a big scheme where essentially he took $47 million in shareholder loans from the company and didn't really seem to have much of an intention of paying it back or paying any interest. And now he's in the hot seat. That's the long and short of it. Pete, you found this article. So what were some of your thoughts when you first were reading through this?
Yeah, one, I didn't really know about it as a company. I think that can happen a lot in the hospitality space, that you're well aware of the consumer retail brands and you don't necessarily know that there's, one owner. In Canada, we have Recipe Unlimited. They're huge. That's like, the Swiss Chalets. And I think they ended up buying the Keg. They bought a lot of companies along the way. You have restaurant brands international like Tim Hortons, Burger King, similar owners. So I thought it was just interesting. The one, didn't know this company existed, and they did, I think, 2 billion in sales in a year in terms of hospitality. That's a lot of food. Two, $47 million is a lot to steal from a publicly traded company and kind of get away with. And considering I think it was almost 4 years ago, 4 years ago.
Yeah.
So, yeah, I think that was really interesting. So I felt like, interesting to share it with you guys. Like, how did it take this long to kind of, get found? And obviously, I think that's a reason for a stock to go down in the short term. And if either of you thought of it as a buying opportunity, now I wish their financials had backed them up a little bit more. I'm seeing, revenue going the right way, but net loss is going the wrong way. And, in a softening economy, discretionary spending like restaurants could go down. But is this something that you might believe in for the future after, they figure out what happens with this near 50 million bucks that Buddy stole?
It's pretty scandalous. Mr. Fundamentals, what do you think?
Yeah. Well, like you, Pete, I didn't hear about this company prior to this news coming to light. So this is obviously not the right way to introduce your business to potential investors per se. But in general, I'm not a big fan of the hospitality industry. I think it's very difficult to win out. There's certainly strong brands, and even speaking to them, like you mentioned Twin Peaks, they also have Johnny Rockets, Fat Burger, Marble Slab, and Buffalo's, and multiple different names that are notable. But I was actually quite surprised that, of course, obviously with the certain runoff, the market cap has dropped, but it is only an $87 million market cap today for a company who has some notable brands. So it's kind of surprising. And perhaps that has to do with, again, like you said, Pete, their net loss, is close to $100 million nowadays. They have total debt of $1.52 billion, and they're just losing money right now. So I just think that when you look at this business from a fundamental standpoint, and then you add on this deception by previous management, it's hard to be confident in a business like this. And ultimately, it doesn't appear that this business, or really any hospitality business, can really fundamentally separate themselves where they become the dominant player. I've been following McDonald's for a long time, and they're in a similar boat where their financials are not great. And there was a time when they did very well, but it's just an industry that there's so many options out there, and the operating costs are quite high, and you're just kind of stuck in this conundrum where you own these great brands, but it's hard to really differentiate yourself beyond that. So that's where I'm just hesitant even today with the sell-off that occurred.
McDonald's has bad financials? I never would have
It
guessed
does.
that. Really?
Yeah.
Huh. Okay.
I'll pull them up in the meantime.
You pull them up, because like I'm kind of a little bit curious how you might feel because of, let's say, the franchise model. Now, you might not like hospitality, you might not want to own a franchise, right? But the company that's licensing that to you, with not dealing with your operating costs and taking anywhere from 3 to 7% off your top line, that's a business model that, usually can be a little bit more interesting. And again, let's say if you're going back many years, I don't likely want to own one McDonald's, but would I like to own a piece of the brand McDonald's that is a real estate and, brand licensing company that's also, potentially getting a lot of rebates and perks at head office? That's usually what can happen to a lot of these central brands, is that they can do a lot of corporate purchasing. And I don't know how that always appears in financials, but I'll just use some hypotheticals. Like if I own a brand, I don't know, maybe I own a very popular restaurant in the United States, and I have like 100 of them. I have 2 in every state. And then I franchise a bunch of them as well. Well, to my franchisees, what can happen is they can purchase their goods through me because I have purchasing power, but you're just acting as a middleman and actually charging them a higher rate and taking the discounts for potentially your own brands or something like that. And that's very, very common in the hospitality industry, whether you're getting it through rebates or better rates that you're not necessarily always passing on to your franchisees. So whether that's Coca-Cola or, you can't go open a McDonald's and serve Pepsi. You do not have that choice, right? I would say if you own one McDonald's franchise, which is actually very difficult to do, you usually have to buy a few of them, you're not getting the same benefit of that Coca-Cola deal as, the head McDonald's corp is. And now multiply that by McCain fries, multiply that by, the beef that they use, all of these ingredients. Like, these are some of the biggest purchasers of some of these goods in the world, right? They're getting a lot of that back. It can be interesting in their financials where they decide to put that, because they might not put it as a cost of good, right? They might put it in a way that might be a more taxable benefit for them. So I would urge, when you're looking at the financials, think about that and what you might do as a clever kind of accountant or business owner.
I think if you're really clever with money, you just take shareholder loans from a public company and don't pay them back. And, if you take on interest, isn't that you can just write it off as well?
I think, can we talk about this guy and what he did? Like,
how aggressive is this? How do you get away with that?
Oh, man. So his name is Andy. And Andy somehow embezzled $47 million for private jets, jewelry. What else did he take?
And how did people not notice these massive loans? Like, okay, here's why this blows my mind. Because rewind a few years ago, when the Very Good Food Company was the trending like meme stock of the day, and the co-founders each took, I want to say it's $1 million personal loan, something like that, which is a big no-no. You don't do that. Shareholders absolutely annihilated them for it. And I'm 99% sure they had paid the loans back. One of them paying it back really quickly. So it's kind of like a non-event in that sense. But shareholders absolutely came at the fortress with their like flaming pitchforks and all that. And that was for like a couple $1 million for a company that was worth almost $1 billion at the time. So how do you take 47 million in loans and like it takes this long to come out? Like, what?
Well, I could get adding the expenses on your business. So let's say a private jet, you're CEO of a company and you have a franchise in basically every state. It'd be very difficult to find that on the books. Let's say you're going to New York to Vegas for a weekend. I don't know. The IRS would have a very difficult time finding that out. Buying a Ferrari and some jewels and even a piano. I don't know what's happening there.
That's the entertainment portion of meals and entertainment. So I get it.
Maybe furnishings, decor for a new restaurant. That could be it. But I don't know. And the other thing that, I find interesting is to make these transactions, it's not like the CEO can just go to the bank account by himself.
Yeah.
Like, generally speaking, you have two signatories, and most bank accounts are set up like this. Like, if you have a corporate bank account and it goes over $5,000, you need, I don't know if any business owners out here to send a wire, you have tokens. The token expires on my phone for my business account every minute. And then you need another one to then approve it. So I don't know where person two is who was approving this, but someone else is approving on this indictment too.
Yeah. Well, actually, on that point, so there's CFO, Rebecca Hershinger, as well as their managing director from Anderson, who oversaw their taxes.
Okay.
William Amon.
Bunch of dirty dogs.
Co-defendants. So they're the ones in the group listed with Mr.
Yeah. They were
various practices.
They were on the take. I don't know what it is with audited financials. It always says, like, with the information given, like there's some disclaimer that lets the CPAs off the hook. But yeah,
no kidding. Well, if you're wondering how such a massive company can be worth less than 100 million market cap, this is probably starting to make a lot more sense to you. And just what Declan said, the debt load is insane, $1.5 billion. They mentioned that they were going to IPO Twin Peaks and the other acquisition was at Smoky Bones. It's like I've never been there. It's like a grill house kind of vibe. They're going to IPO those. I don't know if those will IPO together or separately. And then they're going to use the proceeds to pay down some of their debt. But man, they've got total assets of 1.4 billion, total liabilities of a 1.6. But what makes it even worse is 900,000. So the bulk of their total assets is our good friend goodwill, which we know often means good nothing.
Yeah.
So you can't pay debt with goodwill.
I think you got to write off some of that goodwill when your CEO steals $50 million.
Yeah, it's like kind of goodwill now. It's like mediocre will.
Oh man. Yeah, I don't know. That's an interesting one. So even with this, you guys don't see a window like where this could come back? Like it's not going to, do you think it stays down below 100 mil? I don't think it does that. I'm not saying it's a great company. I just think it might be undervalued here due to some of this news.
Ooh, Mr. Fundamentals, what do you think?
Yeah, I think that, at its current price to sales, it does look attractive, but that debt load is very concerning, especially in that they have such a large negative net profit margin. I think it's just one of those businesses that you really have to hope that they can improve that bottom line before you could have any confidence, because if not, they're going to continue to eat up money. I think their cash balance right now is at 40 million. And again, just as mentioning, their net loss was about $100 million. So they have less than a year's burn rate. They're probably going to need to raise money, and they have these negative headlines kind of overseeing everything. Now, maybe that gets brushed aside. Maybe people can look past it due to the value of the brands themselves, but it's just one of those things that there's a lot of uncertainty. And so sure, you can make an investment and there's possibility of it turning around. But again, if you compare that to other opportunities in the market, I don't know why you would touch this.
Mm-hmm.
Yeah, volume's pretty bad too, actually. Not a lot of people are touching it. That's the only other concern. Yeah.
It's just CEO dumping. just kidding. Don't sue me for slander, whatever that is.
Don't I don't think he has the money to do it.
He'll just borrow a few million.
A couple shareholder loans to hire a legal team against you. But you gotta imagine a couple months ago it was 950, right? That's and it's trading around a little over 515. So not something I would look for a long hold, but this is definitely one of the lowest it's been in a year, and then some. So
I mean, the last IPOs of like Twin Peaks do really well, and they able to get a bunch of money for. I have no idea how much.
Who's writing a check for them right now, though? Yeah. Like after this CEO just stole $50 million in.
Great management track record. Like that's the deck.
Like good luck.
Minimal fraud. We lost 47 million. Okay, we're doing billions in revenue.
Oh man. Did in that press release that you saw about the IPO, did it mention which bank's doing it? I'm just curious.
I didn't see.
Yeah. Oh, okay.
The Bank of Satan. No, I don't know.
Yeah. Jeez, like who's the broker getting put on that? Coming one day. All right.
Yeah, no kidding. Watch it just be Goldman or something.
Yeah.
Okay, well, we're going to move on to a little bit of an AI discussion. It's about Nvidia. They're a gargantuan company, much larger than something we typically talk about. Obviously, they're noteworthy because one, we love AI, and two, who has benefited more from AI than Nvidia? And I wanted to take this as like a little bit of an educational moment because they announced not only just gangbusters, like an earnings release, like it was such a highly anticipated earnings release. The bar was set so high and they still smashed it. So this is just a company that can do no wrong for now. They announced a 10-for-1 stock split. And what always I find comical is that people think that a stock split is a good thing and that the opposite, a reverse split or a consolidation, is a bad thing. And I see stock splits send shares higher, reverse splits send shares lower. But to be clear about this, it makes absolutely no difference in the company. Whether you have $1 trillion market cap and you divide it into 1 million shares, 10 million shares, 1 billion shares, it's the same valuation for the company. Each share price is just worth less. Now, that used to matter before companies like Robinhood announced fractional share sales and purchases. You could buy a small piece of a share. So having a low share price actually doesn't really matter anymore. I'm sure there's a few fringe scenarios where maybe it does, like certain indexes, for example, but it really is not supposed to matter. So if you're an investor and that's part of your bull thesis, erase that from the board because it's not inherently a good thing. Now, moving on kind of more to like a company general level, Pete, you love any chance to talk about AI, open floor, Nvidia, AI, stock splits,
I think the stock splits is just a psychology play. And I mean, we know, it makes no difference, but I do think like, let's say Apple continually will do it. Every time they kind of hit a certain level, it's like they like being like $100 stock or something along those lines, right? You kind of always see them wanting to get back there. And it might just be for the retail investor being like, oh, it's $100. Like, I'll do that. When you see 1,000, you're like, oh, am I going to spend $1,000 on this? Like, there must be someone on their capital markets advisory teams that really understands a little bit of the psychology and what some of these tech companies do. I think, Mr. Fundamentals will probably bring up Mr. Buffett, who doesn't believe in it at all, to my understanding. I do kind of see it again on the psychology level that you'll look at it. It's over $1,000 stock today, right? Does it seem more appeasing at $100? Probably for a lot of people. It doesn't make any difference in what it's worth. I don't know. I think, and could it assist a little bit in terms of volatility? There just being, less shares outstanding, less people holding them, having tighter shareholders, like as the float starts turning over, that could be it. I don't know what I would do as a company. I mean, I think it is rolling for sure. I went to a university that has quite a lot of engineers, and a previous roommate has worked there. And one of the things he's kind of told me is actually how fiscally responsible they are in terms of, the other Silicon Valley companies. Cause like maybe I asked him some questions about like, what's your like games room like, and what are they serving you for lunch? And like, he's like, we still pay for lunch. It's subsidized, but it's not free. And I think there's like a gym, but he's like, basically their MO is maybe like give the people what they want, not be like a WeWork type scenario where you're just creating a party vibe, like give people some work-life balance and not try to make them stay on campus all day. So I think that's interesting too, a first-hand take.
That's interesting. They don't serve organic food in the kitchen, and when you're running on a treadmill, it's actually powering their data centers. So
that's right.
Double fiscally responsible moves from management.
No, to your point, so first and foremost about the stock split itself, I really do believe there is an inherent issue or misunderstanding from retail investors where a lot of them do think that because the stock is being traded at a lower price, they think that the stock itself is a lot cheaper. I remember going back to, I know, Pete, you mentioned Apple, but similar with Google, there's a lot of conversation. Oh, great. Well, now I can get Google for $100 per share. But this is something that early on, I tried to like shift my focus towards when I was looking at businesses, is only focusing on the market cap itself and the total value of the business. I try to block out anything that relates to the per share pricing of anything, because it has the ability to misrepresent what the business is truly worth. And when you look at a business like Nvidia, I was trying to go back here, but I want to say that the company about a year and a half ago was an $800 billion market cap. Today, it is trading at over 2.5 or $2.34 trillion, which to some extent, yes, they deserve a higher valuation. They have killed it. Jensen Huang and the whole family at NVIDIA really positioned themselves well with their technology to benefit from generative AI and large language models. And whether they saw that coming or it was a product of their technology and new discoveries along the way, either way, they deserve their applause and they deserve to build the business up that way. But you got to understand that this was a different business not that very long ago. And perhaps that's maybe why they were much more frugal too when it comes to the in-house amenities for their staff and everything. They were a different business. They were a smaller business. And even at that $800 billion market cap, I was arguing at the time that they didn't deserve that valuation. When you compared their revenue, they were making like $10 billion in revenue annually compared to a company like Meta that was valued at one point at $350 billion. And Meta was at about $80 billion in revenue at the time and about 4 times the size of net profits as well. So that's the one thing here is when you look at this business, don't care about the share price, whether it's $1,000 or $100. This is a $2.34 trillion based on what the market thinks right now. But is it intrinsically worth that? You have to figure that out. And the big question here is, can they sustain their current growth? Yes, they are growing their revenue up quarter over quarter. It was 262%, which is ridiculous for a company of its size. Net profits were, what was it here? Their earnings per share, was up 629% from the year prior. So these are insane numbers that, yes, the company's growing fast, but now there's businesses that Nvidia is kind of in a prime position where everybody wants their chips, but competitors are going to come in. The market is going to become more saturated. Intel will catch up. These other players across the world will catch up, and that growth will slow down. So if you still think it's a $2.34 trillion company at this point, then okay, that's fine. That's good. But you just have to anticipate that, okay, how sustainable is this run? The other thing I did want to say, and to your point, Pete, about the stock split is, you're right. Buffett has, for the longest time, he was reluctant to ever even issue a B share or a B class of his shares for Berkshire Hathaway, because what happens when you build up these high prices per share is investors are not going to treat that stock like it's a trade as often. And so it decreases volatility, and it also incentivizes people to hold those shares for the long run. Because again, if you're buying a $67,000 Berkshire Hathaway A share, you're probably not in it to try and make day trades. You don't know how often you're going to be able to trade that. And it encourages that long-term thinking. That's why you look at Berkshire Hathaway stock over the past couple of years, like, it's just kind of consistently gone upward. Sure, there's been slight declines, but the thing is, it reduces so much volatility because people are in it for the long run. They're holding the stock for 10, 20 plus years, and they have, that company is obviously the prime example. But what happens here now with Nvidia is they are inviting the possibility of people who maybe do not have the money to afford $1,000 US share and buy a couple of them. But again, they're neglecting to take into account what the actual business is worth. And so they're just buying shares. And again, it's a great business. Everything about it, they've killed it in every facet when it comes to this boom, when it comes to large language models. It's just, how sustainable is it? What competitors are coming? And is this business going to be growing at the same rate in the next 2-3 years or beyond? You just don't know. It's impossible to predict. And so I think they've done a good job of taking advantage of the opportunities they have now. It's just, what does it look over the long run?
Good thoughts.
I mean, for all intents and purposes, more shares would likely mean more volatility. It's just the odds are that you have more people owning less, which would then kind of likely create more trades for whatever reason, panic selling, all these things. So I could kind of see, both ways. I think it's very interesting because I pulled up Apple, right? And I know for sure around 2008, Apple's probably around $80. And, if I actually pull back to see how many splits they've looked at, by today's outstanding shares, that would be a $3 stock. And it just closed at 187. So that's a lot of shares kind of issued over the years. However, maybe Apple's had moments of volatility, but it's obviously, very steady. So I'm, still torn, I guess, on what the overall outcome is. It is probably a little easier to create some type of compensation through shares too, as you're kind of continuing to issue more. I know I've had a friend that, worked at Amazon as well. And his first ever contract in Amazon, this was a long time ago, he had shares an option class. And the first year was 3 shares. And then it goes up from there. But, I would assume that being able to kind of recruit top talent and put together good option pools makes it a little bit easier too, when you do have some more shares out. So, some of those could really help also.
One final point I have, where I mentioned in the reverse, like a share consolidation, also known as a reverse split, people act like that's a bad thing, especially in the junior markets like penny stock land. Now, there is a difference there where that actually can generally be a bad thing. And the reason you'd roll back your shares, well, there's 2 main reasons. And the first of which is if you need to raise more money. You roll back, 100 million shares, you roll it back to 10 million shares, squish the structure, and then you start issuing new shares again and building up that share count. A big reason you do the consolidation first, even though it doesn't technically make a difference, is that in penny stock land, people do very closely look at the number of shares outstanding. So if you're a tiny company and you've got 500 million shares outstanding, well, it's a really bad look. They'd rather see you have 5 to 10 to maybe 50 million shares outstanding. So it usually signifies that a raise is coming, and which means dilution. So that's why people see it as something negative. The only time that's not really the case is if they announce the rollback at the same time, or at least at very close to announcing some kind of initiative, like a growth initiative or, new action plan, new acquisition, just something to show that, dark days are behind. So that's kind of the only exception to the rule, I guess.
Yeah, I've never seen the reverse split work out in my favor in the junior markets.
It won't. It never really does.
It is quite comical what can happen when you owned a 10-cent stock. So you owned a 1-cent stock, and then it became a reverse 10-to-1 reverse. So then it became a 10-cent stock, but then goes down to 1 cent again.
Yeah,
and
that's
I'm
so
like,
common.
how little is this worth?
It is comical how that works, because especially
it became worth 1/100th of a cent from the initial.
Yeah, they trade at 0.005. It's a thing.
Yeah.
Every time. Yep. So that's kind of my only last little thought there. So if you're buying Nvidia because of the split, don't do it, please. Keep this in mind. However, if you're buying the small cap stuff or the micro cap stuff where it actually is a little more significant. We covered everything. We got a little scandal, a little fraud. We got AI discussion. And we talked about meme stocks. So that is a full agenda today. Let's wrap it there. That is episode 21. We're going to be back to see you next week. As a reminder, we film every Thursday, release every Sunday. Give us a like and a subscribe if you are picking up what we're putting down. So thanks for tuning in.